Hi everybody, Eddie here. Going to do a market projection for 2025. So 24 has been an incredible year. I did a video last year with 2024 projections, and pretty well all of them got hit targets. So for Bitcoin, we already hit the 100,000 level. Not quite hit our 125,000 target, but we will definitely hit that this year in 2025. And because now Trump got into office, I expect that our target will get raised since we hit 100,000 before the new year, meaning there's still lots of time before the end of this bull cycle to go to get another leg up. So this is still a really, really good year to get into Bitcoin, and we'll discuss that a little bit later on. Right. The Meg stocks did really well as well. So towards the early part of 2024, we did got into some Meg names like mostly Microsoft and Google, Amazon. But the whole sector did really, really well. It's very significant part of the index now. Their market value just overtook the entire index. So like these stocks pretty well control the entire index. So I don't even look at other stocks within the index anymore. I only look at the mags now. That's how crazy it's gone. Right. So semiconductors have a huge year, driven by AI and next generation tech developments, as well as names like Tesla, Nvidia, PLTR did really, really well with the AI craze. So those will be some of the stocks I'll be looking at again this year, probably just for that last leg up, and then potentially, if things starting to get bad, we could see us start shorting them as well towards the end of the year. But for now, we're bullish and still bullish. But in for 2025, I'll be trading with a little bit more caution, right? So in 2024, you were disciplined and you capitalized on the opportunities that we suggested. You should have did really, really well for 2024, right? So for 2025, the outlook last year, I talked about how market could go into a bear market in 2025, and it's starting to look to come to realization for potential prolonged bear market. So some of the warning signs I've seen so far this year is the yield curve, the 10 and 2 year. Is starting to uninvert. It has been uninverted. Historically, that's a signal for a potential recession. So in past cycles, the recession followed roughly 6 to 12 months after this shift. So we're getting pretty close to that. So if that happens, it'll be towards like the third and fourth quarter of 2025. So and valuations are just insane right now. So S&P 500 PE ratios is currently way above historic levels. I'll take this chart down here. So the 4P is around 36.5 for a cap weight, and equal weight, we're at 27.5. That's just crazy numbers for just the S&P 500. That means the magnums are very overvalued at the moment. And when things go bad, they're the first ones to turn, right? So you want to pay very close attention to MEG stocks this year to see if the trends start breaking. If they start breaking, you can pretty well go cash or start hedging for your long-term positions, right? So that's what I'll be doing. Except for I'll most likely go cash. I'm already very heavy cash for my long-term positions. Except for my swing positions, I'm actually still very well invested in my swings for mostly Bitcoin sector, right? Um, so another thing is consumer credit. Consumer credit for credit card debt has surpassed like huge historic levels. There's this delinquency is starting to rise like crazy from last year, and there's signs of some financial strains. So now the very last thing that would trigger all of this is unemployment rate. So while unemployment rate is still low, if it's starting to uptick at a rapid pace, historically, rise in unemployment rates is the final domino to fall before a full blown recession, right? So keep a very close watch on unemployment numbers in 2025. Is it starting to increase rapidly? Get out markets, right? Or at least look for short opportunities, right? Or hedge your long-term portfolios, like your retirement funds and stuff. Start hedging it because it could get really, really ugly. And because this is a mega cycle, this is has been I think it was a 16-year cycle so far. Ever since 2008 recession, we haven't had a recession. 20 at the COVID doesn't count because it's a pandemic. So we're going to scratch that out. But we haven't had a recession since 2008, and we've gone straight up parabolically. If we look at the chart, it's gone straight up parabolically since 2008. So, it's really just gone parabolic. And we have that bear market in 2022, and we just continue to rip higher. So if you look at on a monthly scale, right? Look at this. Isn't this the most insane chart you've seen? And this is the index. This is not a high growth name. This is the index, right? So if things start to slow down, I mean, we're priced to perfection here. If things start slowing down, this is going to come down fast and hard, right? So you want to be very, very careful in 2025, 2026, right? It's still early right now. So I mean, we're still trading on the bull side, but the as soon as we start seeing signs of weakness, start seeing unemployment numbers go up, start seeing stocks trading below 200 day moving average, it's pretty well game over. It's time to get out, go cash. If you're smart, learn how to day trade. I mean, day trading saved us in 2022. Like if not for trading, 2022 would have been a really, really bad year, but it turned out to be a great year for us. So it's a great time to learn day trading. And I do have a course on that if you guys are interested. Links in the description below. Um, Anyway, well, that's pretty much what I think could happen in 2025. So I'm just waiting for some signals, right? And so far, the signals aren't good because we didn't get our Santa Claus rally in December. Historically, this has been a warning sign for weak upcoming year, right? So if January turns out to be a down month, there's a good chance that 2025 is going to be very challenging year for markets, right? What I'm thinking for 2025 is we could be a very choppy year, right? So we could get some very strong corrections, like 10% plus corrections, followed by very short-lived rallies, and possibly just form that distribution top, right? So for 2025, you really want to focus on easy money, right? Easy money means good opportunities in still strong sectors and still have very good setups with very good flow of markets. So Bitcoin would be a easy, obvious choice for me. So I'm heavily investing in Bitcoins this year. I try to stay heavily invested in Bitcoin every 4 years during the 4 year Bitcoin cycle, right? So we're well positioned in Bitcoin. It's still a very high growth asset with potential for some very strong upside from here. So we're still invested, and I really want to see what Trump does with Bitcoin. If he starts to um, take Bitcoin as a reserve currency, we could have some massive Bitcoin movements in the next few years. So stay invested in Bitcoin, keep watch. Bitcoin's really good with technical trading as well, so you could be trading around it if you wanted to. But I would keep a good percentage, of Bitcoin for longer term. Well, don't even need to be very large position size, like 5% or something of your entire portfolio for long-term Bitcoin play. Put in a cold wallet, don't look at it. You might in 20 years you might be able to retire for your next few generations, right? So it's something you should consider, especially if the US start taking it as a reserve currency. I'm sure that corporations and other governments will follow suit pretty quickly, and because Bitcoin's so scarce. it's basic supply and demand laws, right? When you have a limited supply and high demand of asset, prices only go up, right? So Bitcoin should be a focus from here on. Now that it legitimizes as an investment asset, right? Before it was more of a risk asset, now it's more of an investment asset, right? So because of the ETFs and stuff. So if US confirms that they're going to use it as reserve currency, that really push it off the edge and something that everybody should have in their portfolios is Bitcoin, right? All right. So for 2025, megs and semiconductors could still move. I think we'll get that one last explosive rally. Once we get that explosive rally, get out as soon as you can, right? As soon as you see weakness, as soon as you see the trend break, you want to be really quick on the exits. You don't want to beg hold anything this year because if it start breaking down, you start holding. If you guys traded 2020, you know exactly how that feels, right? Some people show me their portfolios with 95% drawdowns on some of those high growth names that some other services that recommended them to hold. Yeah, don't hold through bear markets ever, right? Like I don't care. I don't give a shit what other funds and banks and your financial advisors tell you to hold through long term. But really, if you actually get out of the markets and buy back during recessions at the lows, or it doesn't even have to be exact low. You could be close to lows. Any kind of 20% drawdown, you can start going back into the markets in small trenches. Right? We have a whole strategy based on that. But if you follow the right rules, you can make some significant gains. And recessions are huge, huge opportunities to make long-term wealth. So 2028, you played that correctly. Right now you should be retired, right? So you could retire, I should say, right? If you wanted to, right? So if this recession is going to be large and quick, and we get like say 70% drawdown on the markets, which is very possible because we've basically gone parabolic ever since 2008. So if that happens, you could enter the stock markets at the very bottom, and then we could get like these huge, prolonged, decade-long bull markets, right? And if that happens, then basically you make some really, really significant money just by be investing in long term, right? And if you're smart and you know how to use technical analysis, you could get significantly better returns, right? Right. So, anyway, moving on. I think 2025, great year for day trading, right? So if volatility is starting to rise and there'll be a ton of intraday opportunities. If you traded 2022, you'll know about the 100-point swings, sometimes 150-point swings. Imagine buying a $1 option, zero DTE, and then all of a sudden turns around at close to end of day and he flips, and that $1 turns to like 50, 70, $100 by the end of the day. I mean, those are incredible returns, which happened once to me in 2022. It was the best day ever, right? So day trading is the way to go when volatility is starting to increase, right? If you know the right strategies and the right setups, you can make a ton of money day trading, right? You don't even have to be very risky. You can just scalp like I do. Like I don't really hold in day trading. I like to scalp one or two candles. So that's just my strategy. But we teach plenty of strategies for day trading, and a lot of the guys that follow me and train under me for the past 3 or 4 years, they're finally getting some consistency and just waiting for the right market opportunity, which is coming up pretty soon there. So these opportunities can be life changing if you've had the skill set to do the job, right? So day trading is definitely something that we'd be looking at, especially now. The UDT options make up for like over 50% of option volume now. That's just crazy how much that the options actually starting to take toll how the market really works, right? So now we instead of focusing on all technicals, we kind of migrate with technicals and flows because you really have to see where the money's flowing into now with UDT options because you can change really quickly. So if you mix the two, you could get a really good confluence of information for a very specific trade that you can make money off day trading. So that's basically what we're looking at. Also in 2025, anything that's overvaluated has very high valuations, very high momentum, you can start looking at potential short plays on them, right? So stocks like Nvidia, Tesla, PLTR, what was the other name? That car company, Carvana. Those names that's gone up like crazy, way overvalued. Once things get ugly, those names tend to tank really, really hard, especially the high growth names with no income, right? So like even looking at into like ARK invest their list of stocks. So whatever type of name that you're interested in that you've seen in the past year that's gone up like crazy but has no earnings, those are the perfect names to short, right? 2022 was a great year for that. Yeah, but 2022 I wasn't really shorting. I was 100% focused on day trading. So this year I might incorporate some short trading in my portfolio, mostly option short trades because I like to limit my losses. I don't actually like to short stocks because it's very dangerous to short stocks, especially on short squeezes. But with if you buy a put option, your maximum loss is the value of the put option, right? So that would be the only way that I actually short trade. So if when I'm talking about short trade, I'm basically saying buy puts, right? Um, yeah, so for 2025, that's basically our focus. So now let's look at some charts to look at some levels to see where we're going to head to, right? So for S&P 500, we pretty well hit that 6,000 target. I'm thinking if this thing get pushed, we could see maybe 62, 62, 65, 68. If he hits 7,000, I'm going to go full short. Right. So if he hits 7,000, I'll be looking too short. Because that would be very extended into our target range. So that would be the room that you can go to. But I'm thinking is we could be chopping around for a little bit, like I'm thinking if we're going to go up, it's got to go up within the first 2 quarters. If it does go up in the first 2 quarters, we're basically going to form distribution top, right? So it's going to basically look like something like we'll chop around like this, and then you'll just break, retest, and then start coming down pretty hard like that. So it could be a really choppy year. I don't know yet. We'll see what happens. I trade price action, so everything I say right here is just projection, educational purposes only, not financial advice. And all the potential scenarios, I follow the price action, right? It doesn't matter what I say in these videos. If it start going against my theory, then I just go with the price, right? I'm not going to argue with money, right? Basically, a lot of people argue with money just because somebody says he's going to go up, they think he'll go up, right? Things change all the time. It's the stock markets, right? You really want to just follow the price action, follow the money. If people start taking money away from the market, it's likely it's going to come down. If the money supply start coming down, markets is going to come down as well. So, it's very basic economics. So follow the price, right? A lot of people think that we're in the head and shoulder pattern right here. So you got your, let me see, where's my drawing tool? So you got this, your necklines right here. It could, it could come down. There is a gap right here that still need to fill. So you see that I have this uh box right here. So I say hedge get the big ass gap below, right? So I put that down weeks ago. So that was when it was trading around right here. So I'm saying if the price came down, you want to hedge this to fill the gap, and then potentially to see what happens right here. If it actually breaks, fills the gap and comes down, and it breaks this area right here. If it breaks this area right here, it's likely to retest and then fail, test 200, and then maybe even fail 200, retest, and then start coming down rapidly, right? Or uh, we could see something like this. We come down and then we start going back up in 2025, and then we fail to make a new all-time high, and then we go down, right? So this will become like a distribution top, uh, uh, where because how distribution top works is funds have a lot of shares and a lot of money in the markets. In order for them to get out, they have to start unloading, which takes months to do. That's why there's distribution tops, right? Because they can't just take everything out all at once. There's no liquidity for that. And you'll create like a panic. It would be like a self-fulfilling prophecy where if everybody start taking their money out, the market just crashes in a day, right? Which happens before, right? So that's why it never just like straight out crash. It's usually goes in a range and then it rolls over, right? So that's something I'm predicting for 2025 is if we can't make new all-time highs and we start breaking down, right? Your best friend really is looking at the 50 period moving average. If that breaks down, it's really a good idea to hedge. If 200 breaks down, it's a really good idea to get out. So if 50 breaks down and then it reclaims within a week, that's perfectly fine. It's normal for the market to react that way. It's basically fake outs, trap the retail investors to get out, and then they take your shares and go higher. That's usually how the market works, right? Funds make all the money, retails tend to lose all the money. That's how the market functions, right? If you know how it works, then you can be on the other side of the trade, right? So right now, I'm looking at this area as potential trap. So, like to me, this still look fairly bullish. If you reclaim, say 6,000, we could go higher, right? 5950 short term would be the area I'm looking at. To reclaim, if it reclaims 5950, which reclaims the 21 period moving average, we could go higher into 6,000. If it reclaims 6,000, we'll test the all-time highs and then potentially head into our target area, which is 6,200 from last year. So, uh, and if we start going down, we're looking at this gap fill right here, and we're looking at this level down here, 50, say 5,700-ish area. So if that area falls down, then you aim for 200 period moving averages around the 5,500, 5,560 area. And you see these red lines down here. These would be some of the support levels down here. These are some major support levels and areas that could still bounce. But once these areas are taken out, once these areas been taken out, chances are we're going to go lower. We're going to probably have bounces off these levels, but there will be lower high bounces, which creates momentum for downside for opportunity to short again, right? So you'll be shorting dead cat bounces once it goes below 200. So that's the trading plan for 2025, and right now it's still looking pretty healthy. I'm looking at yeah, I'm looking at probably 6,200, 6,300, this zone right here, as the potential all-time top for this cycle. But who knows? We could go much, much higher. But that's what I'll be aiming at. If we can't hit those numbers by May, then prepare for some shorting, right? All right, so let's take a look at Bitcoin. Bitcoin, here's your, let's take a, actually, I have a Bitcoin chart set up. So these are projections from last year that I mark on here. So we pretty well hit like almost spot on, right? So even the pullbacks are almost spot on, especially here, almost spot right on. I haven't changed any of this. This is exactly the way it is. You can go back to our video for 2024 to take a look at this, but we're pretty well spot on. The only thing is we didn't quite hit 120,000, but it's going to hit there sometime this year. So I did use that as a target as a demo, but now because Trump took office, I think it could potentially go higher. So if that's the case, I marked this green area here. So we could run up to 150,000, pull back, retest this trend line, and then do like a blow off top scenario where we hit like 200,000 and just start crashing down, right? So that could be a scenario that happens for 2025. I'm not sure yet. We'll see what happens once he hits the 120,000, right? If you guys want to follow what I do on a daily basis, we do have a Discord group. You can join leecapitaltrading.com, link in description below. I also do courses on how to recharge, how to reflow, and some of the tools that we use and some of the setups that I personally use to trade the markets every day. So if you guys are interested, link in description below. Right. So for Bitcoin, so Bitcoin has a 4-year cycle. So this is the Bitcoin chart I got set up here on TradingView. So with Bitcoin, we're just entering into the bull cycle. So we just broke off the last cycle high. So usually that's just the start of the bull cycle. So we're halfway through that. So if this bull cycle actually comes to fruition, we could see some significant gains, right? It could go as high as these midpoints right here. So around 200,000. In previous cycles, we did hit some of the extreme levels, which is all the way up to the outer band right here, which is insane. I don't think we'll hit those type of levels. But for this cycle, I'm thinking conservatively we could hit 150,000, right? So that would be basic goal. If we hit 150,000, I'll be going majority cash. We still trade it, but we won't be holding it like we're holding right now. So we've been holding this since we've been trading around this since 30,000. I really should have focused more on like 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 MSTR or something because last year I focused too much on Mara, and Mara just did not perform. Well, I still make quite a bit of money in Mara because we've been unloading at like 30 because you had to break through 30 in order to get the momentum up, which I think we'll hit like in the next couple months or so. But we got rejected Mara at 30 every single time. And every single time I don't take it all out, I take like half out. So the other half kind of suffers around that 30,000 while the other half made a lot of money. So it's still like a very good year for Bitcoin for me, but still, I mean, if I was in MSTR or IBIT, it actually would have performed much better than just holding into Mara. So it's for this sector, you really want to be more diversified. So if you want to be more direct exposure to Bitcoin, right? You want to buy something like IBIT, which is direct exposure to Bitcoin, spot Bitcoin. If you want something more leverage, you can buy a leveraged Bitcoin ETF, or you can buy MSTR. MSTR is basically like almost like a 2.5 times proxy to Bitcoin, but it doesn't always move with Bitcoin, right? They tend to front run Bitcoin, and then it tend to come off before Bitcoin actually finishes the cycle. So it tends to overshot the trend a little bit. But if you understand that, it could be a very good vehicle to trade if you like that leverage and if you like that risk, right? To me, it's very good risk. Like it's high risk, but it's also high reward, so it's worth doing. But the options are very expensive, so it's good to sell options, but you can buy the shares and then sell the options along with the shares to get yourself some pretty significant income. There's some strategies that we used last year on Mara and MSTR, and we were making about 30% a week on premiums. It's just insane. Like you could sell it for a month, and if you go sideways for a month, you basically pay for all your shares. And that's a strategy that I teach in the course. Like I say, link in the description below. You want to learn how to do that. Anyway, yeah. So I think for this cycle, the last part of the cycle, I think the miners is going to play a lot of catch up. They're highly shorted because I think the funds were doing a pair trade where they're long Bitcoin but shorting the miners. So if miners start moving up as well as Bitcoin, everybody's going to get short squeeze, and it's going to create like massive parabolic moves that can turn like 2x 5x on the shares, right? Sometimes 10x. So it's crazy. Anyway, there's certain levels that you have to watch for it to break in order for that to happen. So it's something that I'll be watching closely in 2025. probably just in the next 4 months, because if he's going to move really, really quickly. Like miners tend to move like in 2 weeks to a month, they finish the entire move. Right. So you can go from like $10 all the way up to $50 in literally a month. So, that's something that you can you can watch and see if you can catch some of that wave. I'm thinking that we'll make at least a double or triple on that play before we actually cashing out, and just riding with a small position. So usually I like to make only what I call it the easy money, which is the first third of the entire move, because it's predictable, it's easy, and I can size it. Right. Anything after that, I still trade it. I just don't trade it with size like I do at the beginning of the trade. So what happens is I like to lock in my profits, and then I like to ride the rest of the wave with the profits that I made. That way, I have no risk to myself if it actually goes against me, right? So that's very good risk control. Make sure you put that in your notes. Anyway, let's move on. So that's Bitcoin. Ether is not performing much this year, but I think Ether will have a pretty good year when once we get into all season. Once it breaks the all-time high, you can hit like probably around that 6,000, 7,000 range area, just eyeing it. I'm thinking because this is a big cup and handle. So the easy way to measure cup and handle, you just do this, put it up here, and there you go. Around that 7 to 8,000 area. I say I would say 7,000 would be a good area to go as a potential target for Ether. Same with Solana. Solana is actually doing quite well as well. It's also a nice big large cup and handle. So these are more for alt season if you're into crypto. I'm mostly focused on Bitcoin because I like to trade options. So I'll be trading Bitcoin proxies. And now that IBIT has options, uh, it's a no-brainer to go heavy in IBIT because with options, you're basically playing like a sure thing with leverage when you're doing options in IBIT versus before where we actually use these very high risk proxies like Mura and MSTR to play the options market. But now you can play IBIT, and IBIT it just basically follow Bitcoin. So if you're bullish on Bitcoin and you know what's the price target in Bitcoin, just buy IBIT. Give yourself enough time for your options to play out, and then you'll make some big money. That's just the way I see it going, right? So anyway, let's move on. So the Nasdaq, so we just the SPX. So let's take a look at Nasdaq. Nasdaq finally start picking up some momentum. It was lagging the SP 500 for a little bit there, but it's starting to pick up. It's still very well in trend. This trend is still very strong. We are very, very extended, obviously, from this low here, from 2022 low right here. So we're very extended onto that. I'm thinking if this thing ever crashes down, your targets on the downside 17,000, and then yeah, you're looking at 10,000. If it goes down to COVID lows, you're looking at like 7,000, right? Huge. That's like a 70% drawdown. Yeah. I tend to like to short the Nasdaq when things are getting ugly because they fall down the most. Yeah, about 73% drawdown. Wow, that looks like a juicy short once this trend is over. So keep an eye out on that. If you really want to short indexes, like it's safer to short indexes, right? The best index to short is IWM, which is the small cap Russell, the Russell small cap, and also but the thing with small cap is they didn't run hard this year yet, so it's something I probably won't be shorting because they didn't run hard. If they run hard, that's my go-to short. But Nasdaq ran hard, and I mean this is a really really good short. I mean, some people like to trade the VIX, but nah, I find the VIX is very unpredictable. Well, except for when you're shorting, well, when the VIX pops, it's a good short because it never stays at 100 like 100 VIX, right? You can always short it. But yeah, I don't I don't normally short, but like Nasdaq would be a really really good short. If once this wave is over, Nasdaq would be my go-to. S&P 500, you can. It's just that it's let's take a look at S&P 500. let's see what the drawdown is kind of like. So let's take COVID low as my target for the drawdown for the recession, which I think is very, very possible to hit. Probably not this year, but maybe 2026, 2027, around there. But if we go down, yeah, that's a 60% drawdown in COVID low, 60, 65. Nasdaq's about 75, so you get at that extra 10%. And Nasdaq is a much bigger index, so I mean, you can buy some Lalo puts on that thing, and if it hits, man, you're printing money like there's no tomorrow. Yeah, so I'm actually really looking forward for this market to roll over because I want to reset because market is so high right now. It's very hard for me to swing trade with size at the high when I know that the cycle is about to end. So we need a good reset. So if the market resets, it creates a lot of opportunities to make a lot of money. So, you really want to learn how to trade the markets because these are like life-changing moments, right? You don't get a recession that often, right? And we're heading to a recession. Recessions make a lot of money. If you were trading the recession of 2008, if you shorted that in 2008, you would have retired in a year, right? If you bought the market on the way up from 2008, you would retire as well, right? Those are what I call life changing money, right? So if you learn how to do the markets properly, it's not just about, oh, you can go down there and I should just buy put. It doesn't work that way. You can buy put and still lose money in the bear market, right? You have to do it properly, right? You have to know like what strikes you use, what deltas you use, how much time you need, and there's a bunch of things involved. And this is why it's so important for you to actually learn how all of this work, which takes time. And in order to speed up time, you really want to follow somebody that knows what they're doing and not just some furu online, with their Lamborghinis and shit. You want to actually know somebody that been trading for 20 years and know that they've been doing it for 20 years, right? Not just some 20-year-old that shows up with a Lamborghini that you probably rented with his daddy's money. And like in 2020, a lot of those popped up. A lot of those people, they're not even on YouTube anymore because that's basically what they are. They knew nothing about markets, have zero experience, and just got lucky in 2020 rally, which everybody made money, right? So. Anyways, moving on. Let's look at some of the Fang names and we'll go through some indexes and then we'll wrap up this video right here. So, all right, let's go into some Bitcoin stuff. Okay, let's see. This is my Bitcoin list of stocks I trade. So I trade BITX, which is leverage Bitcoin exposure 2x. So these names, they're meant to be momentum plays, not meant to hold. Once the momentum dies down, you want to get out because they do decay like options, right? So they rebalance every day, so they do decay like options. So when it's going down, it's very hard to make your money back if you're just holding that through like a pullback or a bear move. So you really want to just trade the up moves and trade the momentum. Usually I like to use them for intraday trading as well as week, like for a week maybe hold into a momentum player and stuff like that. So some of the names that you want to look at is maybe coins and exchange. I don't really trade coin to be honest. It doesn't move enough for me. It has some pretty significant gains here actually, but it just doesn't move enough for me percentage wise. So I don't really trade coin that much. If I want to trade anything like in this class, I actually I much prefer trading MSTR versus coin. So if I'm gonna trade anything with a bigger stock price, I'm gonna trade MSTR. MSTR is a little bit more predictable. For me, I think MSTR will go higher from here. This possibly the bottom. It did try to fill this gap. It didn't quite fill, so you could still come back down and fill that gap. There's a little gap down here as well. But I think if it reclaims, say it hits 350, it's very likely to go back to up to 400. Around 400, 450, this is where the danger zone is. There's a lot of distribution right here, right? This area right here. So this is resistance. So if it goes back up here and chop around right here, you'll go sideways for a little bit, maybe like another month or so, and then it's just going to blow up just like here, right? It's going to be fast. It's going to be furious. My target on this is like we want first try 500, and then we're gonna go to like 700 or 800, right? So if you want to take a lotto, there's a lotto that you can play on this. You can play like a say 650 or 700 lotto Uh, but you want to make sure you get it like probably a few months out, 6 months, 6 to 8 months out, and you might hit it, right? So yeah, it might be a good play that way. But for me, like I'm just going to trade. Probably I have a lot of the shares. I buy the shares. And I also trade MSTX, which is the leverage version of that. Like, look at this stock. It went from $220 down to like 33. That's why you don't hold any leverage stocks when they start going down. Any, doesn't matter which one. You don't hold any of them. You just take your loss and you just move on. Usually, you make a ton of money and then you give some of it back. You always give some of it back because they drop really really fast, and you want to get out before you drop even more. So you want to whatever. If you're green, you never want to go red. So if you hit like 220, come on, like this thing ran up like this. If you're at 220, I would at least cut half or two-third of it where I'm locked in. And then if the other one-third goes to like 30, it doesn't even matter. You still get out of the trade with a profit, right? So it doesn't matter. It's just good risk management that way. Anyway, one of the better plays is HUT in this in the minor sector. HUT actually performed quite well. I don't really hold much on HUT because my family holds HUT, so I don't really like to hold the same stuff as my family because if it goes down, then everybody goes down. Right. So my family has some heavy in HUT. I'm more into Mara. So HUT's been doing really good. So I'm thinking next target it's about $40, which takes you up to around this level around right here. So you're looking at around right here. And then if it gets a massive source squeeze and goes crazy, you're looking at somewhere like up here, up here. And potentially the all-time highs, right? So it could be insane. Like it could go up to $100. Who knows? These names you really just want to ride the momentum and get out whenever. So um Mara, this is what I mean. Mara's been like really tough to hold on to. Like I know that you'll go higher at some point. But last year's been a tough year. Like I wasted a whole year holding this thing and it didn't go past 30. Right. It did one time and I thought it was gonna go up. You see that where my projections were? It didn't go. So, but I mean, I didn't lose money on this. I still made a lot of money on this because I got out half in positions around 30 and then I just buy them back on the way down. So I got out at 30. I started buying them back again by selling puts at 25, which brings my average down to about 23. And then I buy it all the way down to about 20. Once it hits 20, I don't really buy much at 20. Because I most likely I'll be fully invested by 20. And then I wait for it to reclaim and then I add on after it reclaims 20. That's usually what I do. So right now we're got another opportunity here. There's a nice bull candle right here. I'm waiting for it to reclaim about 20, like I said, and then I'm gonna go back in some more, aiming for 25 as my first target, and then 30 as my secondary target. And at 30, again, I'm going to out half. And I don't really want to go out more than half at 30. The reason why is once this thing takes off, there's no time to go back in. Because if you look in the past, right? Look at these massive moves. Like, it once they break out, they just go like crazy, like gap up after gap up after gap up, like until exhausted. Like same right here. It takes 1 week to go from like literally 30 to 57 in 1 week, right? So you like for me, like this is more of a longer swing trade. It's gotten a little too long now, but I got a feeling it's coming. It's actually being set up. You can look by the volume right here. That's accumulation volume here as well. So you can see the volume, how the volume increased significantly. So there is a chart. I don't have it here with me, but as the entire year, as the prices go down, institutions were actually loading up. So basically, they're holding the stock down so they could buy more. So basically, they're shaking out retailers to take your money. That's what they're doing, right? So as you sell your shares, they're taking your shares, they're accumulating, and then once all the retailers stop selling, there's no more liquidity, then they push it up and they make a shit ton of money on the way up. So that's how the market works, right? So I'm staying invested. Like I said, it's been an underdog. It's below 20. Like your risk is very low. What's the worst thing gonna do? Hit 10. They have 44,000 Bitcoin. their market cap is at five, was it 6 billion or something like that, and their Bitcoin and loan is worth like 5 billion. That means 80% of the value is in Bitcoin already. Like how bad could it go, right? So it's I think it's just underperforming. It's just manipulation by the funds, and because they're taking the same strategy as MicroStrategy, and plus they're a miner as well. So it is to me I think it's more valuable than MSTR at this point, and it's a good hold. I think we're gonna hit at least 50. If it gets really extended, we're looking at about 80 to 100, 200. You could be like MSTR and finally reclaimed its all-time high from the initial IPO. If that if that happens, that would be just crazy. It'll be like 200 something, right? So I don't know. So just think about this. If Bitcoin hits 200,000, then Mara should have a double valuation of what it is today, right? So it's at 20, so it should be at least 40, right? So that's a conservative way of thinking it. That's contrarian way of trading. So if Bitcoin hits 200,000, this is definitely going to 40 at least. But I think it'll be significantly higher because at that point, what happened is all the shorts going to get squeezed, and then we'll get like a massive parabolic move. That's how all of these miners are going to work out. So the ones I really focus on is Mara. I start going into Riot. Riot's been a really shitty underdog. But it's starting to pick up some momentum in rise in volume as well on Riot. Oh, this volume is just it's accumulation, right? Anybody that has a lot of Bitcoin, it's being accumulated at the moment. So it's just kind of waiting. CSLK as well. I think they also have Ether as well that they mine. So with CSLK, I'm probably just gonna aim for like 15, 16, and then I'll be out. I look at this. There's a lot of distribution right here, so I'm not really looking for much of there. So I'm looking for like a little quick play on there, and that's pretty much it for that. But the best play is Hut because Hut once it goes past this 35 area, there's not much resistance above that, so they're well ahead of the other miners. Mara really need to break above 30, above 35, and then it starts to take off. So keep close eye on that. And Wolf is like a little miner that I've been trading this since like $2. Did really well on it. I just didn't have a whole lot of size on it, but I am starting to size with this play because if this breaks above $10, right? If this breaks above $10, this is going to moon. It's a small cap, so it's easily manipulated and easily pumped up, just like here in the last cycle, right? So if that happens, you're looking at like 30, 40, $50 on a $6 stock. That's like, you know, that's a really significant return on that. If you don't have to put in a lot of money in this because the return is so high. Just throw in like 5% allocation if you want per stock, or if you don't want to own individual stocks, because these miners they're going to like issue shares like crazy once you start moving. So it's like MSTR, same thing, right? Everybody does that. It's how they can get more debt, get more loans to buy more Bitcoin, and so on, so on, so on, and at your risk, not their risk, right? Um, so that's how they work, but they still go up. So if you want to not have the exposure, you want to buy like something like a WGMI, which is a ETF of the miners, and I think it has Nvidia in there for some reason, and just anything Bitcoin related. WGMI is a good choice. BITQ is also okay for a Bitcoin ETF, right? For miners. So if you don't want the exposure to like any of the share issues and stuff like that, which a lot of times they do get like a big drawdown on the day that they announce the issues. So you really want to if you want to avoid that, then you can go with the ETF, right? Okay, let's take a look at some of the megs, and then we will finish off the video. With the megs, Apple's been showing signs of weakness compared to the other megs because they ran so much off this area. So it's just kind of retesting this area. If it actually holds around that 240 range, if it can hold, it's likely to go up higher. Um, Just eyeing this. It's actually pretty well at target. So if it unless it pulls back a little bit more, if you pull back a little bit more, maybe down to like 220 or so, it could potentially run to 280. Uh, just by eyeing it, 280, 300 area. If it goes parabolic, you can also hit there as well. But Apple's not really a stock I like to trade unless it's very low. Because it doesn't move as much as the other names, so it tends to be quite boring for me. Plus, Warren Buffett's kind of exiting his entire position, well, majority position. Um, Amazon right now is forming a little flag. It actually popped out of here. It was a nice cup and handle pattern breakout. So it still has extensions to go. I'm looking about 250, 280 as targets for Amazon shorter term. So on this wave higher, I think we'll hit that target. Once we hit those targets, time to get out, time to lock in your profits, and then just be patient and wait for opportunities. That's the way to go. Um, Okay, AVGO, kind of just in this room, big gap up on that. I profit off the gap up. I kind of lotto the earnings and got lucky. But yeah, anyway, it's already at target. It's a little bit extended. Is that target kind of? It's probably going to like consolidate for quite some time before you can go any higher. Google is in like a pennant kind of pattern, also a cup and handle. We did this inverse hand and shoulder trade back here a little while ago. It did really well. We did the full cup. I did exit early. I didn't go for the full cup. I go for half cup, like I always do. I like to take profits early and lower my risk. So, but anyway, it's set up again. You want to see it break either direction. If it breaks upper direction, it'll go higher. If it breaks lower, it may come down, fill that gap down there, come back to 170 something, right? So you want to pay very close attention to the megs this year, because if the megs start showing weakness, start breaking down and stuff like that, it's very likely that the index will start following soon, because they're so heavy on the indexes now. Like they're heavy allocation on the index. Like S&P 500 really need to do something to like cap the weight on the index, because they're taking way too much weight. Because sometimes, like I like to use internals when I'm day trading, and the internals absolutely did not work anymore. Well, like majority of the time, it doesn't work anymore, because if say the megs are going down, but the rest of the market is going up, the internal is going to show positive signs of market going higher. But because the weight is so heavy on the megs, it actually drags the entire index down, and you can't perform. Right. So it would give you kind of like mixed information. Right. So now, like if you're using like internals, you kind of have to also watch the megs to see if there's confluence. If there's no confluence, then really you can't really make any money off of it, right? So you don't really want to trade it when there's not in confluence with the markets, right? So you want to pay really close attention this year on these mag names to see if they roll down. Lily is breaking down retest and it fails. So I'm thinking this thing, if it doesn't reclaim the 200 pretty soon, it's going to come down much lower. So I'm looking at $600 target on Lily on the downside. So it could be a good short. Right now the market is still going higher, so I'm not really shorting. But this is the early signs of breakdown on Lily, which is also sitting a pair of the index as well. So Meta consolidation. It's pretty close to target. I have like a 650 target on that thing. We almost hit it last time at 630 something. So it's pretty close to that target. You see that we had a huge parabolic move ever since the low of 2022. So we're pretty close to that target. It's not really worth unless you're day trading this. It's not really worth swinging it. Definitely don't want to hold shares in it. I want to start trimming if you are hold a share in this thing. Even though we can still push a little bit further, but I mean risk reward is just not there. Microsoft, it's kind of consolidated for the most of the year, right? Last year, because it's just been trading in the range. It had a nice, it was an early mover, so it kind of broke up before everybody else did. So it was front running kind of like the mega stocks, and now it's just kind of consolidating, catching up, and it looks like it's hovering around that 200, which is a very dangerous zone, especially now towards the end of the market. So pay very close attention to Microsoft. If Microsoft start breaking down, it breaks, say if Microsoft breaks below 380, chances are it's done. So and that would be a good signal to get out of the markets as well. Well, I wouldn't say completely out, but be very picky, be very good with your sizing because you definitely do not want to be fully invested. You want to just trade like some good setups with lower amount of capital, right? So usually in a bear market, you can still trade the upside. It's just that you size it very differently, right? So that's something we teach in the course as well about sizing, and sizing is really how you make your money. Just FYI. Okay, Netflix. I don't really trade Netflix either. Nice parabolic move. It should be coming down. The reversion to the mean is too far extended, so it should coming down to maybe 850 right here. Breaks that. You're looking at around the 750 area, right? So if that breaks, even at 800, there's some support at 800, but the once you start coming down, you're pretty well looking at around that 750 area as potential first support, and then down to the 200 at 700. If you break 700, it's game over. Nvidia. So Nvidia, there was like this head and shoulders pattern. Everybody was trying to short, but as you know, it's towards the end of the cycle. There should be one big push at the end of the cycle. It's not there yet. I'm looking for that one big push. I'm looking at this thing 160 and then 180 and possible 200. I wouldn't be trading up at 200 zone, but it's possible you'll get there. The easy trade on this, if it breaks the all-time highs, aim for that 170, 180 area. That would be the trade. And you can look at this. The volume's been declining as it's consolidating. So that means there's not a lot of sellers just yet. It's just to me that looks just like a consolidation before the big run. So because if this was distribution, there should be a lot more volume, right? It's just very light volume as you go in sideways. That's a good sign because there's no sellers, right? So yeah, I think this Nvidia is going to go higher. It's going to have like one last leg up. I think you'll have one last leg up, and then it might be done. Yeah, yeah. This looks to me like a big giant flag to me before the next level or higher. So, all right. Tesla. Tesla. I got out of this thing way too early. Even though I had this 400 projection, I got out around 350 or 330 around there. I think it was right here, around that. Once I see the red candle, I always get out. So we were in this in around the 250 area. I did make a video before, or maybe just with my course, that I was saying that there was a 150 target when everybody hating Tesla. There was a 150 target to buy, and then it just kind of rocketed. I did a little trade there. I didn't really. Uh, I kind of let Tesla got away from me. I mean, I still made quite a bit of money on it because I sized it, but I got out really, really early because Tesla is not really a stock that I like to hold too much because you had to keep watch on it. Um, because I day trade the SPX every day, it's really hard to keep watch on a volatile stock. So I tend to just make the easy money and I just don't even look at it anymore because I focus too much on the day trading part, right? UNH, good short. The CEO got killed up here, and then he just went straight down from there. I should have shorted that thing. I was telling the group about it, but I didn't. I even drew the way that he's going to move. See, I even drew there. I never took the trade though. Wish I did. No, it's a boring trade, but like because it's a boring stock, but it would have been a pretty significant short there because their premium, their on their options are not that high, so that would have been a decent short. Walmart still looking pretty good. He hit the extended targets. 95 was the target on Walmart. He pretty well hit. So everything kind of like really towards the tail end of the moves. At this point, I really don't want to buy any, say, stocks. or hold any of that. I will trade it, but I won't hold it. If I trade it, I would do use like a lotto type of trade, which is expect zero, meaning if it doesn't work out, you lose all your money. But if it does work out, you make quite a bit of money, right? So I tend to do that on towards these end of cycles, and I size that appropriately, right? You don't really want to allocate too much money into a play towards the end of cycle unless it's a sure thing, right? Well, close to a sure thing. If it's really, really good setup, then yeah, definitely take the trade, right? So right now, the I think the only opportunities right now I really see is in Bitcoin. I mean, there's some opportunities in other sectors that I don't like to trade, like energy and stuff, gold, silver. Uh, there's some high growth names that are being set up, like take a look here. UPST, I posted this around the 30s. It went as high as 90. I choked my exit around 60 too early, but that's just where I play. But I think if this holds 60 right here, potentially it can go up to like 115, 120 around there. So there could be a play there. SE, yeah, everybody hated this stock on the way down. This is the stock that kind of killed everybody in that group I was saying. But anyway, SE, it's at somewhat of a resistance zone right here. I posted this trade like around 30 when he reclaimed the 200, and then retested 200 right here actually. So I did two trade on this, but two very small trades, two very quick trades. I got out before the big move, because I don't like holding these names because you actually can really keep watching these names. And I say I focus more on day trading because I make more money that way, but. It's being set up right here to go for a parabolic move if he really wants to go. If he does go parabolic, you're looking at about, let's see, 140 first, and then possible 180 to 200 as your potential targets, right? So if he goes, it could be quite good. Um, so Reddit, man, I wish during IPO I traded this and I completely forgot about Reddit, and now it's like way up there at 200. This might be a good short actually. When this market is done, keep this on your watch list. I'm gonna set an alert. I'm gonna set an alert right here. If it breaks that 150, I might be interested for a short. Okay. PLTR, just insane. Like this, it's way overvalued now. So this would be one of the names I'll be shorting if it drops. Um, yeah, it's definitely a short. This is the Carvana. Yeah, I shorted this already. I took some profits already. I took the short on the fail 50. Um, it's coming down to about 200, so about 155. There's still 20 points to go. It's a good short. I mean, this name, I knew somebody that was shorting this all the way down here and lost all their money. Um, I'm not going to say names, but he lost all his money. Like, holy shit. Anyway, now's the time to short. If you're watching their wink wink, this would be a short. I hope you didn't lose all your money before that. Um, yeah, these are some of the growth names. Affirm is another name. Affirm is a name that it can go really high when the momentum's there. So and then it's a good short afterwards. So like it's looks like it's still going. Your target's about 90 to 100. And then it really runs, yeah, you're looking at about that 130 zone. Potentially. And these names can run, like they can run hard. Because there's a lot of people shorting these names, so they'll get massive short squeezes. That's what makes them run so hard. But anyway, once this cycle is done, these are good shorts as well. So yeah. Anyway, I think I'm going to finish the video here. Anyway, my projections for this year, it's going to be choppy, focus on day trading, go for short-term swings. Um, what else? Make some money in Bitcoin. Expect some range trading in an index, right? Expect a lot of chop. There'll be a lot of fake outs. There'll be a lot of manipulation because at towards the end of the cycle, the funds really need to trap all the retailers, basically. So be very, very careful this year. It may not go into a recession just yet, but it's going to get there. And focus on the signals, right? The unemployment rate, the megs breaking down. Very simple stuff that can save you a lot of money, right? If you want to follow me, if you want to see what I'm doing for the year, if you want to learn how to day trade, I do have courses. I do have a Discord service as well, which I do a market update every day, and I'm in the Discord like all day long for market hours. So leecapitaltrading.com, link in description below. Hope you guys have a good year.